Welcome back to another edition of Forex Tech Magazine. This is your host, Lewis. Hope you guys are doing well. Today is January 22nd, 2019. Hope you guys already made a ton of money so far during this new year. If you have not, hang tight, hang real tight. Hopefully, we'll get through some tips and tidbits today that will help you make your 2019 a very profitable one for you. But before we get into that, let's go ahead and get into this disclaimer. Disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for informational and educational purposes only. Nothing that we share with you should be considered to be investment advice. If you are in need of investment advice, then our advice to you would be to seek out the assistance of a licensed, competent advisor. So now that we got that out of the way, let's get into why you came here in the first place, and that is for some trade ideas. So let's jump on over here. Now, first thing we're going to look at is, hold on a second. First thing we're going to look at is, my bad. Not this one. This is the US dollar, Japanese yen. We're not looking at this one. So let's get out of here. Let's look at the Great Britain pound and zillion dollars. So what we're going to do is we're going to look at some of the pairs that we were talking about yesterday and see if we have permission from Mr. Market to go ahead and purchase some of these pairs to go ahead and get our entry in here and to participate in the market at this time. Now, as you remember, all right, this is the A-B sequence. We were looking to see if we formed a C. This right here, this horizontal line was our support resistance line, right? And we notice how after we did our A-B initial move up, right, price then pulled back to the support, broke through for a little bit, pushed back up, broke through a little bit, pushed back up. And remember what we talked about? We said if price can cross over the downward trend line, right, get on the other side, which would make price then be in the buy zone, right? And then that was a signal for the market to go ahead and buy this particular currency pair, and then we could ride it up to wherever our D extension was at. Now, given the fact that price pulled back into the red, that means that our D extension should be in the red, which would be here. Price has done it. Price has pushed through, right? It kind of went back and retested a little bit, right? And now it's just kind of trailing off to the side. So now the question would be, Lewis, is this a buy signal? Lewis, can we get into the market now? And my answer would be, maybe, right? And you say, well, Lewis, why is it a maybe and not a full-blown yes, we can? Grandma Sleep Less, what's going on, man? Well, the reason why it's a maybe and not a full-blown yes is just because it's moving sideways, right? We'd love to get into this market right now, but the only issue I have with this is that will this market continue to push up? And there are definitely some fundamental things that's going on with this particular pair that could make it, pull back down and do a full-blown reversal. So my advice to you would be, if you're trading this particular pair right here, use a lot of caution with it. Because it could be good, could be bad, it could get hurt. So just be careful with this. But if you did want to get in, then yes, the market is telling you that it now is an opportunity to get in and take advantage of this particular pair because price has crossed over into the buy zone for this particular pair. Okay, and if you're going to do that, a couple things you may want to do. Typically, what I like to do is I like to put my stop loss below the A, right? That's just me. I'm very conservative like that. So that way, if price goes back in and retests, this retracement and decides it wants to go back to the blue or the green, we're going to still be safe. All we will do is just readjust our take profit. Some folks like to put their stop loss right here below the C, right? Because if what this saying, if what we're looking at is true, that means that the C should be here, and price should fly up to the to our red D extension. Now, if looking at that, that means that we have, if we're going to use the C, that means it's 90 pips worth of losses that we could potentially incur. And if we go back to the A, that's 320 pips of losses that we could potentially incur. How much will we be looking to make on this trade if we go through and the trade is actually profitable? Well, let's see, we'd be looking to make 369 pips. So it may not necessarily make sense from a trading standpoint to get in and put your stop loss back at the A. But if you feel comfortable enough to put your stop loss in at the C, then yeah, you're doing more than a 2-to-1 risk to reward ratio. And remember, that is key to being able to stay in these trades over a long period of time. You want to always make sure that your rewards are a lot more than whatever it is that you're risking, because if it's not, then duh, you lose a couple of trades and then your account's going to be gone, right? Versus if your risk is always small, if your risk is always smaller than what your reward is, you can lose a couple of trades, you lose a lot of trades actually, and still be in the game, just because as long as you're making some progress, it's going to offset whatever losses that you may have. So just kind of keep that in mind when you're looking at this particular trade. As always, this is an opportunity to potentially get into the market, but use common sense with it, and also look for the best trades possible, right? So look for the best setups. Let's see if there's a setup that's a little bit better than this one that we could get into to potentially make money, right? So when we're looking at setups that are potentially better, we're gonna be looking at from the standpoint of risk to reward ratios, and also just how active that currency pair is. Because the last thing we want to do is get into something and it's just trending sideways for the next couple of weeks, because not only is that boring, but it's like bleeding to death by 1,000 paper cuts. This is just nerve-wracking over time. So let's look at this one right here. Kind of the same deal. Price has crossed over into the buy zone, right? It's up above our counter trend line. So this is a clear signal from the market. It's saying, yes, we can get in here and buy at this time if we like to. The other thing I'll caution you about too with some of these pairs is that we're hitting up on our support and resistance zones for these pairs. So if you see right here, so a lot of times when you get into these zones, these are like U-turns in the market. So essentially what happens, once price push up into this area or get close to this area, you'll start to see price make a U-turn and push back down. So don't get discouraged, don't get dismayed. You may get, if you buy in now, you may get up here, it may turn around, right? But then you have to think to yourself, are you going to hold on to it? Are you going to, sell it off? I would always use a little bit of caution, and I would say that, hey, if you got profit into the account, go ahead and lock that profit in, right? Let price push up. If price retests back, then there might be an opportunity for you to purchase into this particular pair, and then let it push on up to your original D extension, take profit. Okay, so just kind of remember that so you can actively manage these accounts. And like I said, you want to limit your losses, eliminate them if at all possible, and take profit when at all possible, based off of some type of sound strategy that you may have in place. Okay, so let's see where we're at now. Let's see what the take profit is at. Take profit is about 275 pips away. All right. If we go all the way back to our A, I think we kind of talked about this last night about why I got double A, double B in here. But it's 325 pips, so that's definitely risk reward ratio, definitely out of whack here. And it's about 109 pips here. So okay, so if you was gonna put it back towards the C, once again, if you're gonna put your stop loss back towards the C, it's 109 pips. You're risking that in order to capture 200 and some odd pips. Once again, it's one of those things like, think about the size that you're going to be trading. Think about the size of the account that you're going to be trading. If you're trading standard lot, that's going to be basically $1,009 that you're going to be risking to capture, about $2,000, right? So if the size of your account will allow you to risk $1,000 to try to get $2,000, and you're still going to be in the game, if you lose, then it may be something you want to do. If not, look to lower that lot size, and maybe instead of trying to trade a standard lot, maybe you go back and trade a mini lot or even a micro lot. Break it down so that way you don't go out, make a move where you're over leveraged in the market, and then all of a sudden you go from being, a winner and you're trading, you're feeling good about yourself, to all of a sudden like, now you got to try to figure out, how you're going to get your account back open again because you just got a margin call or you just blew through $1,000. So be smart about it. But once again, this is definitely one that we could trade. But we're going to see if there's something a little bit better. Is there a little bit better setup in the market here that we can trade? Something that got some real fire, some real momentum behind it that we feel really good about. Yeah, we get into this and it's gonna break through. This right here is the Great Britain pound, Japanese yen. It has not crossed over into the buy territory. Now remember, all these downward trend lines that you see me have on on these charts, these are all that we drawn the day before. And so in this particular pair here, price has not crossed over it, so therefore definitely not a buy signal, definitely not one that we want to get in at this moment. So this one right here, we're gonna probably just, we're gonna ignore all together. So this is not even an option. So let's just get out of this one, back that one up, and let's go over to Great Britain pound, Aussie dollar. So here goes a pretty good one. Made a really good aggressive move, right? Over into the buy zone, pushed up really well, pulled back to do a retest. So now it's pushing back up again. Yeah, why not? This one right here definitely could be a buy zone. The one thing that I'm looking at with these pairs, and the one thing that does kind of I'm not saying it's necessarily a bad thing, I'm not saying it's necessarily a good thing, but nobody's crossed above the B yet, right? So here goes your A to B, right? Swing low, swing high, right? Swing low, swing high, pull back, right? Swing, right? Higher low. Nothing's pushed above that high. And remember, whenever we get a uptrend, what do we have? Well, we have higher highs and higher lows, right? So you have a low, you have a high, you have a higher low, because this low here, right, is higher than that low that was there at the A, right? But what we haven't had yet was a high that was higher than the B, which is here, right? A couple things that kind of talks to me about is tells me that it could be that momentum is kind of slowing down in this particular pair, right? Or maybe just momentum, or maybe just interest hasn't peaked yet, right? So once again, just kind of be cautious. Great Britain pair is one of those pairs right now that is kind of viral. Everybody's in the news talking about it. A lot of people are taking positions in it in different accounts, but whether or not it is going to push higher or lower, that's to be determined. What I got? I got Wow669 says, "Is this a real or demo account?" Hey, Wow669, this particular account right here is actually a demo account. We have a real account that we also trade as well. We'll get into that a little bit later on in the show. With that live account, we actually took a small amount, right? And what we're doing with that account, we're actually trading futures, options, and options on futures within currency pairs, just to kind of show you trading from a different perspective. One of the things that we found, especially when we were talking to a lot of folks last year, there's a lot of complaints about Forex brokers out there because we're here in the States, right? We're kind of limited to the leverage that we can use in a Forex account, right? One of the things one of the concerns that a lot of folks have is that these Forex brokers are unregulated. So you hear a lot of people complain about how their stop losses get triggered automatically when they get a couple pips close to where they're supposed to have that stop loss in place at. And so what we try to do is try to give some options to say, hey, listen, if you trade on a regulated market, right? If you trade on a regulated market, right, there are some things that hopefully you shouldn't have to worry about because these things are going to be regulated. There's going to be oversight, and so that way you should feel a little bit more comfortable with. And then also too, you know, in order for us to be able to get some really good leverage to be able to go in and trade and be able to make some, to be able to actually make a profit that's decent, we need to use a certain amount of leverage, right? And so when you're trading with the futures, you're trading with options, things of those natures, it allows you to be able to get that leverage that you need. And also the beauty about trading with futures and trading with options, some of the problems that a lot of traders are having is not so much that that they are wrong about where the market is headed, right? They're spot on about where the direction of the market is heading. The problem is maybe their stop losses are in the are not properly accounted for, right? They don't have a stop loss in the right place, so they want to get stopped out of the market too early, or perhaps, you know, they do have the stop losses in the right place, but the problem is that the account is so small that it could not withstand a drawdown. Well, one of the ways around that, one of the options that's available to you around that is using options to trade, right? Another thing is people complain about not being able to see market volume. Well, when you trade on a regulated market with a futures account, you actually can see volume for that particular pair and for that particular trade. So if those type of things concern you, there are options away from the spot forex with these brokers. All these brokers that just keep popping up overnight that you can trade, but you got to kind of learn how to do it. You can still use the smart trade software that we use right now, which is what I do. I use the smart trade software that I have right now to go in and to make my trades, to go in and do my analysis and everything. And then what I do is I come back in and I place the trades on the other account. So hope that answers your question as for what we do and why we're using this right here. So if anybody else got any good questions, that's a great question, right? If anybody else got any questions, please feel free to ask. You know, we try to be 100% transparent here, so that way you guys know what's going on and give you guys some good information to keep you in the trade. Okay. So anyway, so here we go. Once again, it hasn't made that higher high as of yet. So once again, use caution when you're trading these pairs, right? One of the things that you may want to do, like I said, is I usually put my stop loss or around my C once it crosses above the B. But it may not be a bad idea just to kind of place it here now anyway, right? Just out of cautious. I don't know. It was kind of a deep pullback. It pulled back pretty good. So that's probably what the 0.618. Yep. Pull back. It could have pulled back deeper, but it didn't. Kind of hit that wall right here. So I don't know. Be cautious with this one. But it's definitely, once again, it's one that's open. The market has said that yes, you can trade that one. And if you're looking to buy, it might be a good opportunity for you to get in there and purchase. And the last but not least is Old Faithful here, which is the Great Britain pound US dollar. And as you can see, this one right here has really done nothing. And this right here is a prime example of what we don't want to get, right? This is what I don't want to do, right? You don't want to get into a pair, right? Whereas it had a, oops, go back. Get over there. It had a pullback, right? But the pullback was a shallow pullback, right? Price was on target. Price was on target to reach that D extension, right? It was going up, right? But before it got there, right, it just starts turning back and turning back and turning back and moving to the side and turning back, right? This right here is one of the ones that you don't want to be into because, you know, it's just sitting there watching your account just really kind of fluctuate between nothing, right? It's barely going up, barely going down, just moving there sideways. Now, the good thing about this particular pair here, price typically, once it's moving sideways, once it comes out of that sideways move, 70% of the time, it goes back, it trends back into the original direction before it got into the sideways move. But that 30% of the time, right, is what could kill you, is that it could actually continue down, right? So if we was basing this move right here based off of price pressing up, right, and price was pressing up prior, right, then, you know, the analysis would be that price should continue to press back up, right? But now it has a ways to go. Well, not too far. It's 164 pips. to go to press back up. So still, so the risk to reward ratio, not necessarily ideal, but here's the thing. Couple things. Let's see. One, price has not crossed back into the buy zone, I don't believe. Let's check it out and see. Nope, hasn't crossed back into the buy zone, and it's just trending sideways. So this particular pair right here is really not anything I'd be interested in getting into at this time. So I'd have to say, you know, if this is a pair that you're looking at, I would use extreme cautious with this one here. It said, wow, 669 says, how from easy way trade without stop loss or something else? How from, I'm not sure you say it says, how from easy way trade without stop loss? I'm not sure what you're asking, but here's the thing. Don't ever trade without a stop loss. That's just rule number one, right? And the good thing about it, if you trade into ABCD patterns, and this is a great question, right? I hope I'm answering this question right. I hope I'm understanding what you're saying. You should never trade without a stop loss, right? And what you should do though, if you trade an ABCD pattern, your stop loss is going to be pretty much right there for you whenever you trade. And this is why I always encourage people to use this type trading. And I'll show you exactly what I'm talking about right here, right now, right? Let's just look at this Aussie. This is a Great Britain Pound Aussie dollar, right? All right, let's just look at this right here for a second, right? So you got your A, you got your B, right? Now what we're doing, we're looking for our C, right? So we know that the lowest point on here is going to be our C, right? Before it crosses over into the buy zone, right? So boom, we got our C. So you got two places, in my personal opinion, where your stop loss could go, right? Either A, either, I'm saying, I don't confuse you with this A right here. Either one, your stop loss is going to be here under the C, right? Or two, your stop loss is going to be back up under your A. That's just my own personal opinion. When I look at this right here, when I go in, I look at my risk to rewards assessments, I'm either going to be looking to put my stop loss under my C, right, or my A. Either way, right? If I put it up under my C, this is one thing you always got to keep in mind. And this is where a lot of people get in trouble at, right? When they put their stop losses too aggressively. There's no guarantee that price will not come back and retrace under that C, right? If you get in early. Let's look at it, a prime example right here. This is our A, this is our B, right? If we would have came in and said, okay, right here was our C because, you know, price went down, right? And for whatever reason, we think that price is going to go back up again, right? And we came in here and got in, we could have thought this was our C, but guess what happened? Price hit that downward trend line and it starts to move back down further. Right, we could have then came in and said, well, this is going to be our C now. Now, would we have been correct? Yeah, we would have been correct about that. But, man, that would have been a really close C because it almost got tapped out right here, right? That's why I personally like to put my C back here below my A, right? Because for one thing for sure, I know that, I'm sorry, I put my stop loss below my A. The one thing I know for sure is that if price goes all the way back, price retraces all the way back from here, from this B, and it goes all the way back down to this A, right, and goes below that A, guess what? We're no longer in an upward trend, right? Price, you know, it's pretty much killed that, right? Now we should be looking for sell signs in the market, right? If it goes all the way back below that A, that initial wave, that initial buying impulse wave where everybody comes into the market and they're pushing into the market because they think this is a really great pair to trade. If price goes all the way back below that, that tells me that, you know what, it's time to get out of this market. It's time to get out of this trade because buyers are no longer believing in this particular trade, right? So that's why I advocate the stop loss here. Now, this is the other thing that I advocate too, though, right? As price begins to move up and you're getting closer towards your D extension, whatever it may be, whether it's at the green, the blue, or the red, right, that you adjust your stop loss accordingly, right? Because your stop loss does not have to be static. Just because you put it in when you initially got into the trade does not mean it has to stay there for the entirety of the trade, right? But you got to be smart about it, right? If you're getting some good upward movement on the trade, lock in some profits. You know, the one thing that a lot of traders do wrong and they can't seem to get right is the fact that they either they get really greedy or they get really hopeful in the market, and neither one of them is really good for your account, right? And so what happens is as you start to move over into a profitable trade, lock in your trade, move your stop loss up, adjust it, right? And that way, you guaranteed at least that you have a risk-free trade on the books, and that no matter what happens in the market, if you're asleep or if you're out at the store, you're someplace with friends or whatever, and all of a sudden, I don't know, the world decides to fall apart, guess what? At least you know you locked in a profit, right? You don't have to go back and see your account where your account got blown up or you got a margin call because you didn't have a stop loss in, or your stop loss that you had in when you initially got into the trade, which was way down here, all of a sudden got triggered. Okay, but just remember, you got options to trading. You don't have to just come in and trade one particular pair. Um, and if it doesn't look good, if the setup is not there, if it doesn't have a really good setup in place, just walk away from it. Go find something else that has a better setup. I mean, we already looked over here tonight, and we looked at what the Great Britain pound, Japanese yen. The setup looks horrible, right? There's nothing in this thing that tells me I want to buy. I'll be a buyer in this particular market at this moment, right? It's going down. It came up, it tested the downward trend line, bounced off of it, came up, tested again, bounced off of it. Why would I want to buy this market, right? Right? I don't want to be delusional. I don't want to talk myself into something that I know isn't there. And that's the whole purpose of trying to really keep this thing simple and just using the ABCD pattern, right? To look for simple trade ups in the market. So that way we're making our trading a lot easier and we're not going to stress ourselves out trying to trade something that's not there. Okay? Don't force it. Just keep it as simple as possible. Trade what the market gives you, right? And make it easy for yourself. Just make it easy on yourself. Make it easy on yourself. And have a good time trading, making money. Okay? All right. So hopefully that answered your questions. I don't know if it did or not. If it didn't, hit me up at questions@forextechmagazine.com or either forextechmagazine@gmail.com. So that way maybe we can get in further detail, and then I'll post that question up for our next stream. Okay. All right. So let's look at so that's pretty much it for our pairs right now. Like I said, there's certain ones in here that looks good. I like this one right here. If you want to trade Great Britain pound, Australian dollar, that looks pretty good. Great Britain pound, Canadian dollar is in the buy zone. And the Great Britain pound, New Zealand dollar, and looks like it could be in the buy zone too as well. The Canadian dollar and the New Zealand dollar, because they're kind of like trading sideways, just be very cautious, right? And also too, because you got these support and resistance areas up here. Just don't be surprised if price hits one of those areas and then proceeds to bounce back, right? I probably will go ahead and get into one of these, if not all three of these tonight, but we will, we'll look at it and see how this progresses. Let's see here. All right, so let's get into our Alpha brand. Oops, I want to get into this one here first. All right, so here goes the Alpha brand ones. These are the ones that we're looking at, trading out of the other account. This is the US dollar, Canadian dollar. As you can see, this thing was in a downward trend, but it has crossed over onto the buy side. So now it's telling me, now I'm getting mixed signals, right? So now you're getting signals saying that, hey, initially this price was going down, right? And here goes the downward trend line showing that, price is going down, so price should be bouncing off and going back down, but it's not. Prices went through it, bounced back off of it, retested it, bounced off of it, retested it, bounced back off of it again, and now price is making its way back up. So price is slowly approaching the A on this particular pair, which once again will tell me what? That the downward momentum in this particular pair may be officially off of the books, at least in this time frame, right? That's the other thing too. Don't limit yourself by just trading off of one time frame. If you can afford to, if you have the the availability in your account to withstand certain drawdowns or whatever, if price moves against you, look at ABCD patterns and other time frames as well. Right, it can be very profitable to you. This right here, of course, is a daily time frame, and as you can see, price as a whole is moving up, right? But then here, January 1st, it looks like we get this huge drop off, right? Now price is beginning to push back up again. So what is that telling us? That maybe from here to here, this is the move up or whatnot. Price is now pulling back off of this lengthy move up that started back in September, ended in January. Had to take a little bit of a breather for half of the month of January, and now prices began to move back up. Could very well be the case for this particular pair. That's on a daily. I don't trade off a daily. Let's look what it looks like on a 4-hour time frame. About 2 hours. And of course, we know what it looks like on an hour. So yeah, in this particular pair right here, it would appear that it's kind of bottoming out right now at the moment. You definitely don't want to be the guy that's trading this particular pair, because if you're trying to sell in this particular market right here, you're probably going to be the guy that's going to wind up complaining about the account got blown up and they got hurt. Wow, they don't like Forex, and Forex is not any fun for them. It says Wild669, can you accept my request to friend? Absolutely, I can, my man. So I have some projects. Absolutely, man. Love to be a part of whatever you're doing, my friend. Absolutely. As soon as we get out of here, I would definitely accept your friend request. Okay, not a problem. So this particular pair here, yeah, definitely not a fan right now. This thing right here to me is just like a muddled mess. Once it crosses the A, right, then we might start looking at some buying opportunities in this particular pair, and it may be there. The thing about the U.S. dollar right now is once again, I'll use this term again, a muddled mess. Just because everything's going on over in the States. If you haven't heard, you've probably been sleeping, under a rock or got your head stuck someplace in a wall. It's a lot of stuff going on over here, and not all of it is good. And so there's a lot of indecision that's happening. And the thing about the U.S. dollar, if you haven't already, I don't know what your degree of or your level of expertise is in trading Forex, but pretty much everybody coming in across the board should understand that the U.S. there's certain currencies that are just what we call safe haven currencies, that when the world is feeling unsafe and insecure, and there's a lot of uncertainty, that traders tend to go into those currencies. And the U.S. dollar, of course, is number one out of all of those currencies. The other two would be Japanese yen and your was that Swedish was that krone or Swedish franc, right? And the reason being because these economies tends to be a lot more stability within these economies, and people trust that if something goes wrong, that these countries, that their economies are going to still be intact, and that they can still, it's a safe place to put their money at until they feel like making some more riskier bets or maybe some of the other currency pairs. And so I think that's part of the reason why we're seeing this flight to safety going towards the dollar and also the Japanese yen, right? So this particular pair here, won't put anything in this one right here, just as yet. If you got money in there right now, I feel sorry for you, my friend, because this is right here, it looks like it's probably only about maybe 24 to 48 hours before it's gonna bypass that A. And once it does, we always say, once it goes past that A, guess what? This thing's dead. DOA, right? This right here is the other one. This is the actually one that I'm in right now, and it sucks. Because it is just moving sideways and down, but it's a slow death, right? The cool thing about it, and the reason why we're still staying in here, though, is because even though it's moving sideways, and it has been for a long time, at least in my mind anyway, it's a long time, it has not even attempted to break below the the 0.236 retracement. Hasn't even broken below that yet, right? So it's still a strong candidate to push back up and hit our D extension, right? It's just a matter of it completing some Fibonacci patterns that's already in place. And if you notice right here, whoops. And this right here is completed 2 of them, right? This is the first pullback, right? It was close to hitting the target. The target is actually the green line right here, right? Oh, shoot. All right, let's see. Yeah. Target is the green line, which is our D extension, right? Price came up, pushed up, right? Pressed it, but then it pushed back down, right? Trying to figure out why. I say, let me draw some fibs on here and see if the market is creating a new Fibonacci sequence, but it's something that's moving in downward, right, sequence. And sure enough, it was, right? So here goes our A, here goes our B. Price pulled back up to the C, right? So that means that we're looking at a red extension, right? But then guess what happened? Price pulled back farther here, right? This is what I was telling you about sometimes about how price can have you fooled if you think your C is in one place and then actually price will pull back even farther and you have to go back and readjust your take profits and all that, right? So what happened was price readjusted, pull back, and then the C actually went into the blue. So that means that the blue line now is where our price target is at. And guess what happens? Boom, price hit target. So we created a new ABC, A, B, C, right? And once again, we thought maybe this right here might be the C, so that means that the price target is going to be here in the red. But guess what happens? Price actually pulled all the way back up to the green. Thought we were going to go ahead and clear this and go ahead and hit our price target once again, but of course it did not happen, right? Price just pulled back up into the green, so that means that the new target was in the green, right? And if you look right here, boom, this right here was the swing. This is where the price hit at, right? So once again, this is our C. This right here was our D, so that becomes our A. This becomes our B. So price goes through a whole new ABC sequence again. And for right now, the most part, price is in the red. It pulled back to the red. So that means that our target is going to be here, right? So that means I got to wait until price hits this red target here before I can look at price going back towards my original target, which is here. Which, once again, it just sucks. It just means more time stuck in this trade. And to be honest with you, if I had to do it over again, I wouldn't, right? Looking at this initially, it had all the signs of good momentum, you know, easy trade, gonna be in and out within 24 to 48 hours, make my money and go. Wind up being in this thing for about 2 weeks now, and it sucks. So, but anyway, we're gonna see how this one plays out. We're about, let's see, how many pips away from this price target? You're about 22, 23 pips away from this D extension here. If this truly is a the latest fibs in this particular pair, and we're about 116 pips off from our target, right? And that sucks because before we were probably about 10 pips off. So we went all the way from being 10 pips off to 116 pips off. I know, it sucks. But anyway, that's where we're at with this particular pair. Hopefully over the next 24 or 48, we will be able to get this one wrapped up and in the books. If you guys, once again, got any questions, like a couple of you guys logged off. If you guys got any questions, please feel free to reach out to us at ForexTechMagazine.com. There's a link on the site, and there's also, like I said before, you can go to our questions at ForexTechMagazine.com, reach out to us there, or even ForexTechMagazine@gmail.com and reach out to us there. So anyway, hopefully these guys, this has been helpful to you. Hope you're able to make some money off some of these trades. I'm actually going to go in here and place a couple of trades myself. We'll come back tomorrow and we'll look at these and see if any of these things that we've done today adds to our bottom line. Hopefully it should. But anyway, man, I will talk to you guys soon. God bless. Good night, and I will talk to you later.